and welcome to Olymp Trade. My name is Angie. I am a financial analyst with Olymp Trade, and today's stream is going to be about technical analysis for the lazy. Once again, I welcome everyone. I hope everybody is doing well. I wish everyone a happy Tuesday. And of course, first and foremost, let's go ahead and check the sound and the picture to make sure that you can hear me and that you can see me well. So go ahead and let me know in chat what country you are joining in from. And also, please let me know if you are here for the first time. So you can type that you're new. If you would like, you can simply put a plus sign that you can hear me and see me well. Or, of course, also let us know what country you are joining us from today. Now let's go ahead and see here. I'm going to wait right here. Hello, Ravi from India. Umu Koro, Obedience. Hi, nice to be in this live chat. Very nice to see you in live chat as well. I very much appreciate everyone participating in the live chat. Edwin Augustine, hello from India. Nick, Dilip, Madan, Amit, Parag. Oh my goodness, so many people. Kiran, Anjum. If I missed your name, please forgive me, but I wish everyone once again, a happy Tuesday, and thank you so much for joining us today. Gurav Singh is new. We have Patrick from Kenya. We have Umukoro is from Nigeria. First timer plus. Thank you so much for letting me know. Fantastic. Great. Well, now that I know that everything is fine with the sound and the picture, there are no issues. That is fantastic. Let's go ahead and start with some awesome things. First and foremost, let's go ahead and get our promo code for this week. The promo code for this week you can see displayed on the chart right now. It is SAFE and then the number 26. And this will add 30% to your deposit. It works from April 27th, and it works until next Monday, which is May the 4th. So enjoy. Once again, the promo code is SAFE and then the number 26. And also, since we do have many new people joining us for the first time, if you are new, please make sure that you are subscribed to our YouTube channel. Give this video a like, show me your support, and don't forget to ring the bell so that you don't miss out on any important new information and all the notifications. Like when we have our live streams, you get reminders and stuff like that. So definitely make sure that you are subscribed to our YouTube channel. Now, one more thing that I want to mention is that last week, for anybody that was here on Thursday, we had a stream on which was called Forex on the Currency Market, technical analysis. And what I asked you to do was leave your comments below the video. We collected a lot of fantastic comments, and I thank you so much for participating. I read all of them. You are all really great guys. Thank you so much for all your comments. And today we are going to give out a risk-free trade. Now, I do have a surprise for you guys because you're so active and participating in the comments and stuff like that. I'm going to give out 2 risk-free trades at the end of this stream. So if you are joining for the first time, you can still participate. You just have to go to our homepage, Olymp Trade Global, go to videos, and find the video from last Thursday, was April the 23rd. Once again, it's Forex on the currency market. It was technical analysis. So go ahead and leave your comments below the video. Make sure to include your account ID number so that I know who to assign the risk-free trades to. Now, okay, let's go ahead and start with our stream. So once again, today's topic is technical analysis for the lazy. Now, I'm sure many of you have heard about technical analysis, but there are a lot of different things that go along with it. And maybe some of you are like, well, I'll just do it later, or maybe tomorrow, or maybe this is just too hard for me. So once again, this awesome stream and this presentation is going to be about technical analysis for the lazy. So just simple, basic, explanatory, awesome. Let's go. So this is what I just explained. This course is designed for those who do not want to study technical analysis for a long time, but want to apply it immediately. So we will consider the most important tools and show you examples of how to work with them. So if you want to save time, let's get down to it. Now, technical analysis. First and foremost, let me explain that there are two different types of analysis when we're analyzing the market. There's technical analysis and there is fundamental analysis. We'll have separate streams on fundamental analysis. Now, technical analysis is first of all the study of price movement history. So we're looking at the chart and we're looking at how the price behaved in the past. The idea of technical analysis is that history always repeats itself. You probably heard this quotation before, and therefore analysts are always guided by the idea that what happened in the past will be repeated in the future. Now, also technical analysis is divided into two types: graphical and mathematical. And of course, I will explain. Now, first, let's go ahead and start with graphical technical analysis. This is everything that is related to the graph itself. So when using graphical analysis, we build support and resistance levels. We look for patterns and so forth, like different candlestick formations and different patterns. The main advantage of this type of analysis is that it's easy to use. Now, the disadvantage is subjectivity. This means different analysts can view and interpret the graph in their own way. And sometimes graphic analysis is referred to as classic because it's been around for a very long time and it's popular with Western analysts. The reason for, you see, the graphic analysis, what we mean is the disadvantage is that different analysts can view it and interpret the graph in different ways, is that whenever we are drawing, for example, trend lines, or whenever we are placing our Fibonacci levels, or placing our horizontal resistance and support, we can place them differently, and therefore the picture on the chart may look different for different analysts and for different traders. Now, the second type of analysis is called mathematical technical analysis. And here we use indicators, special lines that are calculated using formulas depending on the price. Now, the advantage of this analysis is the objectivity, because if we use the same indicators, the picture for everyone, for every trader, for every analyst is going to be the same everywhere. The subjectivity is the pain of choice, since there are over 300 different indicators and we need to find a suitable one. So later I'll show you the main ones. Now, for example, for our graphical analysis, as I just mentioned, is like the levels of support and resistance. You can see the main point of support and resistance by looking at the simplified illustration on the right hand side right here. These are levels from which the price appears to bounce and move in the opposite direction. So why do we need to draw them? To know where the price is going to reverse. So basically, this is kind of like the price movement, and our next, and remember, resistance is always going to be on top, because as the price is rising and rising and rising, it starts resisting because it's too high. And support is on the bottom because as the price is moving down and it gets so low that it starts being supported. And here we can actually see a little bit of an explanation, like an example. So here is basically the price movement. This is a line chart or an area chart. You can switch between the different chart types. And by the way, I highly encourage you guys to watch our previous videos. We actually have a separate playlist for master classes. We have a separate playlist for FTT, that's fixed time trading, and also Forex. So definitely watch those videos because I explain in detail how to use the different trading tools on our platform, on the Olymp Trade platform. And I go into more detail. So looking at this example, so here's the price and it's moving. It's moving up and down and up and down. So in order to understand where the price will reverse and begin to fall or rise, we draw two lines. Also note that these lines are parallel to each other. So on the Olymp Trade platform, these are called horizontal lines. So as we can see right here, the price has reached the top line up at the end right here. So basically right here, this is the same chart, we can see that the price has reached the top line resistance. So what's next? Everything is just as planned. Downward movement from level of resistance. And would be the same scenario once the price reaches support. It can bounce from our support level and start to move up. Now, as I mentioned, these are horizontal lines, and likewise, levels of support and resistance can also be slanted. So from bottom to top or from top to bottom. It's actually the same thing. It's just the direction of the price is different. Now, I did explain this in one of our previous streams. Basically, whenever we are drawing our line of our trend line on an uptrend, as we can see right here, we connect the bottoms of the price movement. You can also make a channel just like this, but whenever you are drawing your first line on an uptrend, you're going to connect your lows, so the minimums of the price movement, and you want your trend line to get the maximum amount of price touches without the price breaking or moving beyond this level. On the contrary, whenever we have a downtrend, we would connect first the tops, the maximums of the price movement. But you can also, of course, draw a channel so that you can work in that channel. So once again, resistance is on top, support is on the bottom. And likewise, this is again another example. As you can see, the price is moving up and down and up and down and up and down. So right here, what happens when it reaches resistance on top? Yep, it starts to move down. Alrighty, let's go ahead and continue with some simple graphical analysis patterns. Now, the next thing that I want to show you is head and shoulders pattern. This is also graphical analysis. So we can look at the chart and we can find these patterns. So here's what happens. So head and shoulders, it kind of makes sense. You know, we have two shoulders and the head. The price forms three peaks. The middle, which is the higher than the other two, is called the head. So if the head and shoulder pattern appears on the chart, it means that there's high probability that the price will change direction. Now, this happens at the end of an uptrend because, as you can see, it's forming at the top. This can also be a reversed head and shoulders pattern at the end of a downtrend. So likewise, you basically have these three peaks, but they will be pointing down. So that would be a direction change from a downtrend to an uptrend. And of course, here we can see an example. I know my face is covering just the top peak, but that's okay. So as you can see on the graph, the head and shoulder patterns warned us that there is an upcoming reversal and down price movement. Now, I do want to mention one thing is that whenever we're looking at this head and shoulders pattern, we have to connect these peaks on the bottom. This would be your conversion line. So this is where you would open your trade. And that is what we can see right here. We have a peak, our head, our second shoulder, and right about right here is where we would enter our trade, and pa-bam, the price moves down. Now, the next thing I want to show you is called the double top. Now, my friends, my colleague is in chat helping me out, and I will check back with you in chat just a little bit later after the presentation. So the next pattern that I would like to show you it's a similar pattern, but it's called double top. So once again, double top is going to be at the end of an uptrend. Likewise scenario we can have on the downs. On a downtrend. So basically you can just flip it around and it would be called a double bottom. So just so basically it's a similar situation. Once again, we would look for this line right here, and this is where we would enter our trade. So here is how it's going to look on the graph. So please note that the patterns on the graph won't always be perfect because, of course, the price is always moving and changing. So you shouldn't expect the double top or head and shoulders patterns to be perfectly shaped and symmetrical because theory is theory, but the market is the market. So as you can see, the classical graphical analysis is about searching for different patterns. And today we only analyze two important formations, but there are many, many more. For example, as I mentioned, like the inverted head and shoulders, and also the double bottom. You can also check different patterns such as flag and pennant for further education. So basically, we see two peaks. This bottom right here, we would basically see this line right here, and here is where we would enter our trade to the downside. So we believe that the price is going to be lower than the current price. Now, the next thing that I would like to speak to you is the Japanese candlestick. So basically, previously we were looking at an area chart or a line chart, and then you can also switch the chart type to Japanese candlesticks. This is my favorite one. It's also very widely used. So the Japanese invented their own kind of graphical analysis based on a special graph, so the Japanese candlesticks. Below, we will explain one important pattern called the engulfing pattern. This is what we have shown right here. What we see in the picture is that one candle is bigger than the other candle, and it looks like it completely engulfs it. It means that the price direction may change. So it is important to remember that for this pattern, we need to look at the body of the candle, the white rectangle, not the thin tail or wick that you see above and below the candle. Let me just briefly explain. Whenever we have a green, basically whenever we're looking at any Japanese candlestick, there are two parts. There is this rectangle part, which is called the body. And then we have these tails or wicks, or they can also be called shadows. If we are looking at a green Japanese candlestick, that means that the price, of course, has increased. If it is a red candlestick, that means that the price has decreased. On a green candlestick, this is the price opening. This is the price closing. On a red candlestick, this is the price opening, and this is the price closing. Now, whenever we are trading, we are also looking at different time frames. Let's say we're looking at the 1-day time frame. So each candlestick will show us how the price has changed within that 1 day. If we're looking at the 1-hour time frame, for example, each candlestick will show us how the price has changed within that 1 hour. So basically, these shadows or these tails or these wicks, they basically show us the maximum that the price has reached during that time frame and the minimum that the price has reached during that time frame. So we have a bullish engulfing and a bearish engulfing. So a bearish engulfing is right here. This is an indication that the price may move to the downside. Likewise, a bullish engulfing means that the price may start rising. So what we are looking at is preferably we would like the second candle to open above the previous candle, as you can see right here, and close below the previous candle. And thus, it is completely engulfing the previous candle. That's why it's called engulfing. And likewise, on the bullish engulfing, we want the price to open below the current price and close above the previous, price. So, and this is basically showing us that with high probability, the direction of the price movement will change. And this is once again another example. Let's check the graph. The price was rising, and all was well until the engulfing pattern appeared. The red candle completely, it opened above this the previous bullish candle, closed below the previous bullish candle, completely engulfed it, and as we can see, the price started moving down. Now, the next thing that we're going to move on to is the mathematical analysis. So is it the same math like we learned at university? No. No fractions, no decimals, no integrals or exponents. Let's analyze a few important indicators which you can use for profitable trades right away. Today we're going to discuss the moving average, Bollinger Bands, MACD, RSI, and stochastic. Now, attention. In the examples below, we use the default settings in the for the indicators on the Olymp Trading Platform, but Like with many indicators, you can change the default settings to accompany your trading style or different strategy and stuff like that. Alrighty, so the first one is the simple moving average, the SMA. That's how you can find it in the indicator section of the platform. It is one of the simplest indicators to use. It is calculated as a simple arithmetic average of the price value, and it is displayed as a line. So look at the chart. This black line is the simple moving average. Okay, you see that it basically follows the direction of the price movement. Let's go ahead and look at this a little bit further. Now, what does the moving average show us? The general direction of price movement. If the moving average is pointed down, then it's better to enter trades on price decline. So sell trades, that would be the red button, because we believe that the price will be lower than the current price after a certain period of time. If it is pointed up, then we should trade on price increase. So the green button, because we believe that the price will be higher than the current price after a certain period of time. Now also we can see the buy and sell signals. For example, if the price crosses the moving average from the bottom to the top, as we can see right here. So you see the price was below the moving average, and if it crosses the moving average from bottom to top, then it's time to enter buy trades. If the price, the candlesticks, if they move below the moving average, then it's better to enter sell trades. Now, let's see. The next thing that I would like to tell you about is called the Bollinger Bands. Let's see. Bollinger Bands got their name from the American analyst that invented the indicator, John Bollinger. In essence, it's an upgrade, modification to the simple moving average. Bollinger Bands use a simple moving average with a period of 20. We can see this little star right here. This is what I was just explaining to you previously, is that you can adjust the different settings whenever you enter a simple moving average onto your chart on the Olymp Trading Platform. By default, it's going to have a period of 10. So in this indicator, if you just turn on the indicator, this is why it's mathematical, because by default, it already has a formula inside. The Bollinger Bands use a simple moving average with a period of 20, with additional border lines at a certain different distance above and below. And as a result, we have a channel in which the price moves. So like the moving average, Bollinger Bands help to determine the general direction of the price movement, the trend. If the bands are moving up, then buy trades should be considered. If they are moving down, sell trades. See, this is easy, right? Lovely, lovely stream. I'm so happy that everybody's with us today. So, okay, moving on. So basically, this is how it's going to look. So we have the simple moving average with a period of 20 that's moving in the middle. And then we have the upper and lower bands that form a channel at a certain distance. Now, this indicator has one special feature. Most of the time, the price moves inside the channel, like inside of the outer and the outer lines. But it does happen that the price moves beyond the upper or lower band. Now, after the price, after it moves beyond that line, the price may return inside the bands. So these moments are often used to open trades. As we can see on the chart right here, we can see that the price dipped below this lower boundary and started moving up. Likewise scenario right here. So basically, if it would peak outside right here, outside of this the upper border, we would be able to enter sell trades. So when we look at these peaks, whenever the price moves beyond these lines. However, the fact that the price moves outside of the upper or lower band does not guarantee that the price will return back inside the channel. This is why John Bollinger suggested looking for patterns, like we discussed just previously. So for patterns such as the double bottom, which give us more accurate reversal signals, and use Bollinger Bands for confirmation. Here's what I mean. So basically, three things have to happen in order to form a double bottom. Now, previously in the beginning, I showed you the double top. So, and I explained you can that was at the end of an uptrend. So likewise scenario at the end of a downtrend. So three things must happen for a double bottom pattern. Number one, the price touches the lower band or moves beyond it. Then the price returns and goes beyond the middle line or touches it. And then number three, the price returns back to the lower band but doesn't touch it. Reverses and starts to move up. If this is confusing, let's just look at this example right here. So the price was moving down. It reached the bottom level. It actually moved beyond it. Then it moved beyond the halfway point right here. And then one more time, it moved to the bottom, to the lower band, but didn't quite reach it and started to move up again. So this is this formed for us a double bottom pattern. And also in the beginning, I mentioned that not always, whenever you're looking for these patterns, they're not going to be identical and just perfectly shaped and symmetrical, as you can see in this example. So this is also a double bottom pattern inside the Bollinger Bands that we can use for a signal to enter a trade. The next indicator in line is MACD, one of my also one of my favorites. MACD stands for Moving Average Convergence Divergence in English. Now, we won't go too deep in what convergence, divergence means. Remember, this course is for the lazy bones. But even from the title, it is clear that the indicator is connected with the moving averages. So we can say that it consists of two indicators, histogram and lines. So here we have the lines, and here we have the histogram. Okay, let's look at some examples. So what are the MACD signals? Basically, right here we have displayed two lines. The blue line is called the MACD line. The red line is the signal line. So as in the case of a simple moving average, if the MACD lines are moving up, it is better to trade mainly on the buy side, so for price increase. And if the lines are tilted down, we trade selling for price decrease. If the MACD histogram is growing, so it's going to be on the platform, so you see it's going to be above the lines, it's better to trade in growth. And if it's falling, then on decline. Now, the signal is at the moment the lines intersect whenever they cross. This is a bit trickier, but let's look at the chart. You may notice that one line moves more sharply and the second more smoothly. Now, the line that moves more sharply is called the MACD line, so that's the blue line. And the one that's more smooth, which is the red line, is called the signal line. And basically, when the quicker line, which is the MACD line, crosses the smoother signal line from the bottom to the top, right here, this is a signal to trade for growth. So once again, for price increase. So we can see that the blue line intersected the red line up. This it means that we have a reversal to the upside, so for price increase. And likewise scenario, if the MACD line crosses the signal line from top to bottom, from top to bottom, then it is time to trade in declines, so for price decrease. Now, the next indicator that we're going to speak about is RSI indicator, also a very, very, very popular indicator, one of the easiest and most convenient and widely used indicators. It is called the Relative Strength Index, so the RSI. It's used by traders all around the world. It is loved for simplicity and for convenience. If you want to know its exact formula, you should visit a more complicated course. Here we'll tell you without any extra details, how to use the RSI for profitable trading. So the indicator consists of a line as we can see right here, that moves between two boundaries. So that's this area right here, this shaded in area. If the line goes beyond the upper border right here, the asset is considered overbought. If the line goes beyond the lower border right here, the asset is considered oversold, as we can see on the chart right here. Now, a signal for the trader appears whenever the indicator begins to return back to the normal area. So, as soon as the RSI line crosses the upper line, so from top to bottom, that is, it's returning from the overbought area to its normal area, so from overbought down. This is the time to enter a trade to the downside, so for price decrease. Likewise scenario, whenever the RSI indicator crosses the bottom line, so the bottom boundary, from the bottom to up, so that it is returning from the oversold area, then it's time to open a bullish trend trade, which is for price increase. Okay, so it's pretty easy, right? But it's so useful and fantastic for profitable trades, my friends. I hope you all use this. And the last indicator on our list is called stochastic. By the type of signals that appear, the stochastic indicator can be called a mix of RSI and MACD. However, do not confuse them. These indicators are based on various formulas. So once again, remember, this is mathematical analysis because these indicators are all going to show each trader and each analyst the same picture because it already has a formula inside the indicator. So for example, like the MACD, the stochastic oscillator has two lines. One of them is more mobile, which is the fast stochastic, and the second one is slower, and it is called accordingly the slow stochastic. So how do you use them? Let's have a look. So basically, if the fast stochastic crosses the slow one from top to bottom, then this is a signal to, excuse me, from top to bottom. Basically, once again, just like with the previous indicator, it is time to enter a trade to the downsides. And if it crosses from bottom to top, like we have right here, then this is a signal to work up, so for price increase. But that's not all. You see, there's one more condition. Whenever the lines intersect, it is necessary for them to intersect in the areas of overbought and oversold. So we're not going to look at this for as a signal. Once again, this cross has to happen in the overbought area. Likewise, we wouldn't look at this as a signal. It would be a much stronger signal whenever we're having the cross in the oversold zone. So don't forget to pay attention to this. This is the difference with the stochastic indicator. Now, in conclusion, my friends, I'd like to say if you plan to use mathematical technical analysis, remember that indicators may often they often tend to give false signals. Not often, but they do tend to give false signals. In addition, please note that for more accurate readings, different indicators need different market conditions. For example, MACD and a simple moving average, these indicators, they're best used for whenever there's a strong price movement, whenever the price is trending, so there is a trend on the market. Now, the stochastic oscillator and the RSI, on the contrary, often give the correct signal in the absence of jumps. So basically, it is recommended to work with them on a flat. Whenever there is a flat, this means when the price goes up and down with low volatility. So there's like, it moves sideways without moving up, without very strong movement. So we have a flat, so sideways movement. Olymp Trade wishes you the best application for your knowledge, my friends. I hope you enjoyed my presentation. Once again, now we get to the fun stuff, once again, so this is our homepage for our YouTube channel. So it's time to give out risk-free trades, and it's going to be 2 for today. Surprise, surprise. So basically, This was the stream that I was telling you about from last Thursday, Forex on the currency market, technical analysis. And basically, if you click here, this will bring you to this our live stream right here. Let me go ahead and just 2 seconds here. And basically, we can see that we had a lot of comments. I read all of them. You guys are fantastic. Thank you so much for participating. I read all of them. You guys are great. And what I'm going to do, I'm just going to share this link, copy it. And what we do is we use this website. It's called Raffle Dash, and basically it randomly chooses the comments below the video. So if you guys are ready to start, I'm ready to start. Let's go. And pick a random comment. Our first winner is going to be Cartoon Animation. Thank you, Angie. ID number 549624440. Congratulations, Cartoon Animation. Now, do you work with cartoon animations, I wonder? Very interesting. And let's go ahead and choose our second winner. Are you guys ready? Are you guys ready? Are you guys ready? I'm ready. Okay, start again. 1, 2, 3, 1, 2, 3. Oh, pick a random comment. And our second winner for today is going to be Dinesh Kumar. Good one, guys. It's a good start for me. Thank you. ID number 540-20067. My friends, Cartoon Animation and Dinesh Kumar, if you guys are in chat, I'd love to hear from you. Go ahead and stay tuned. And of course, we'll have your risk-free trades added to your accounts soon. And once again, my friends, thank you so much for joining us today. Let me go ahead and just check to see how everything is, how everybody is doing in chat. Olymp Trade doesn't have stop loss and take profit. Yes, we do actually. Oh, I entered a trade not too long ago for $50, but this is Forex. This stream is basically more based on FTT, that's fixed time trading. But you can see my stop loss and my take profit, so I'm not sure. Oh, Cartoon Animation is here. Fantastic. Yay. Congratulations. Edwin Agustin, thank you so much. Well, I see that everything was fine. Everything was great. Thank you so much all for joining. I'm just going to tell you one more time. Your promo code for this week is SAFE and then the number 26. This will add 30% to your deposit. It works until next Monday, May the 4th. So enjoy. You just need to enter this promo code whenever you're making your deposit. And of course, my friends, if you are new, make sure that you are subscribed to our YouTube channel. Go ahead and click on the red subscribe button. Give me a thumbs up if you enjoyed my stream. Show me your support. And of course, ring the bell so that you don't miss out on any further reminders, notifications, so you don't miss out any of our events and so forth. My friends, once again, thank you so much for joining. Please make sure that you we have a lot of streams planned for tomorrow on Wednesday, and also Forex fundamental analysis on Thursday. So please join us. Stay safe. Thank you so much for joining, and I will see you guys next time.